All right, welcome back. This is the next part of setting up your charts for doing very basic technical analysis. Again, there are other videos on YouTube that are much better about this than I am, but this is strictly super basic stuff to get people started. We're going to look at some other indicators here. And I want to apologize for the first video. I looked at it after I finished recording it, and it seems like the audio quality is not the best, but mostly it seems like some of the menus don't show up in the recording, particularly the settings and the indicators. These drop-down menus don't seem to show up on Fidelity. I may have to use a different piece of software to record that for you. Just try this yourself at home, if you want to rewatch the video or something. When you click on the settings, a box pops up, and there's a bunch of options in there. There's a chart type menu in there to select what kind of display you want, whether you want candlesticks or a line or an open, high, low, close, or a mountain graph, whatever. Again, for me, it's going to be candlesticks every time. And the other thing that was in here, excuse me, was to show price volume distribution. That's a checkbox. Make sure you have that checked. And if you trade in extended hours, definitely have that turned on, and then hit apply, and then you will be good to go for candlesticks and for price volume distribution, also known as volume and profile. The other thing was the indicators. If you press indicators and go to a drop-down menu, you'll see a huge list of all sorts of different indicators. Okay, and the simple moving average it's alphabetical, so just scroll over to the simple moving average and add that. You can add volume weighted average price as well, VWAP. I think this is a volume weighted moving average on VMA on Fidelity. Some of the things on Fidelity are a little bit different compared to other platforms, but quick Google search, you'll be able to figure it out. All right. What are we? Okay, right. So we're gonna add some, again, pretty old school but very basic indicators to this chart that a lot of people use. Some of the more experienced traders today, they may not like using this as much. But this is definitely an old school way of doing things. Again, I'm active on Twitter. If you're finding me through Twitter, you probably know the circles I hang around with. Howie, Big Howie. These are some of the things that he likes because he's old too. Okay. All right. What's up, Howie? First thing we're gonna add is the RSI. That is a relative strength index, and you'll see it pop up here. There's a couple things to know about this. RSI gets explained in really weird ways. I'm going to explain it to you in two different ways. The second way is the way that I like to understand it. Okay, so what you'll see here is that this thing runs from, why is it like this? So this red line down here is 30, or anything below that. It runs from 0 to 100. And the thing to understand about this is that a lot of people just look at the 30 and the 70, and then how the price moves relative to those. Okay, so what you'll see here is that this is the old school way of explaining it, which I don't really like, but you'll hear this often. When it's above 70, a stock is considered overbought, meaning too many people bought this. Okay, and the suggestion is that it'll come back down, and we kind of do see that here, right? Again, looking at how quickly lines go up, or slope, right? This is back in January, where the price rose up really fast, really hard and really fast. It slowed down a little bit, it reached the top, and then it came back down, right? This right here, technically, when the slope of that line changes from sharply up to a little bit less sharply up, that is what we call a bearish divergence, right? Meaning that it looks like the momentum is slowing down. And that's why you don't see really like another slowdown. It just drops. But then at this level, people pick it up again, and it repeats that. Okay, but just because a stock is above 70 on the RSI, right? Meaning it's been overbought. It doesn't necessarily mean that it's going to come back down. It could keep going, right? And we see this here, a period of several days where the stock just keeps going and it's constantly in this overbought territory, right? Which is why I don't like that explanation. What's a better explanation is that this is just a confirmation that yes, people are buying this stock. There's a lot of money flowing into it, and as long as it's trending upwards, more money is flowing into it than is flowing out, right? So it means that buyers are willing to buy the stock at whatever price, and sellers aren't able to sell this stock fast enough to keep this price down. Okay? Now, on the flip side of it is the 30. When it hits 30 and below, it's considered oversold, which means that too many people sold it, and it suggests that it could turn around. Again, I don't like this explanation, okay? What I like better is that, again, just like with above 70 being a confirmation that people are buying and a lot of money is flowing in, anything below 30 is a confirmation that money is leaving, right? People are trying to get out of this stock at whatever cost or whatever price possible. Okay, it's just a confirmation of bearish sentiment. Now, again, just because it's below 30 doesn't mean that it will come back up necessarily, right? It's just a suggestion that it could because it's gone too far down too fast, just like how it may have gone up too much too fast when it's above 70, okay? So that's how I like to understand it. It's just a confirmation, okay? And it's not a prediction. It's a suggestion. That's the thing with technical analysis, okay? Some people, they like to think that technical analysis predicts the future, and it doesn't. It may seem like it, but it doesn't, okay? It just offers you possibilities. It's not probabilities, it's just possibilities. And you have to, kind of do a mental checklist. Maybe you write it down, whatever. You have to keep a running tally of like, okay, well, what's more probable? What's more likely to happen? Okay? That's the RSI. We're going to also look at, again, going back to indicators, scrolling over to M's, we're going to look at the MACD. What it stands for is it's the moving average convergence divergence. Okay. Again, we're not going to get into too many details here, but moving averages, you saw, we added that to the chart in the last video, in the first video. The MACD here, I like using this a lot because it kind of just tells me where a stock might be going, right? It tells me momentum, it tells me trend changes, and again, the slope of the line that you're looking at has a lot to do with it, okay? If it's going up really fast, I'm trying to look at the green line here. If it's going up really fast, it means that the stock is picking up speed, and you can see that in the price action as well. Similarly, if the stock is going down and then the slope starts leveling out, it means that the momentum is shifting. And the thing, if you notice, is that there's two things to note about the MACD, RSI too a little bit. The MACD is what's called a lagging indicator, which means that by the time it confirms that a move is legit, it may be a little late to buy that dip. And if you look at the chart above, right here, by the time the MACD crosses over, it's already run up a lot, right? So this candle right here, if you don't remember, this is February, the end of February. This is when Roaring Kitty, Keith Gill, was in that congressional hearing with the House Financial Services Committee. On the Thursday, he said that he still liked the stock, and on the Friday, he posted his YOLO update on Reddit, which confirmed that he had doubled down on the stock. And then that's when a bunch of other weird things happened, which we won't get into, but then the stock ran up a lot. Okay? The weird thing that happened was that the Fed wire system went down. The Federal Reserve Bank's method for transferring money between banks went down. Is it related? I don't know. Is it coincidental? Yeah, but there's been a lot of coincidences. Okay, so I don't know. And the price shot up. And the price kept shooting up the next day before it got knocked back down again. Okay. So what I like to look at is, yes, when it crosses over, that's a good sign, but also when the slope, the angle of this line, when it starts changing and it starts leveling out, okay, that's another sign that things are changing. Okay, so let's look at today. We'll just go to the past 10 days. We'll stick on the daily chart. And what do we see? Well, on the daily chart, it's looking like this may not be as strong lately. See, this red line is downwards momentum. You can think of it that way. And the green line, green money going in, it is pushing it higher, but instead of pushing it higher, harder, and faster, it's actually starting to level off, slow down, and then go sideways. Now what this means right here is, because these two lines are coming together, it's looking like the price may be going down next week. Maybe. Okay? It could touch and bounce. Okay? And going back to what I said in the first video, when in doubt, zoom out. Okay? So we were on a daily chart. We're going to go to a weekly chart. This is something that Howie likes to do a lot. Okay? Howie sees everything in the weekly and the monthly chart. And this is where we get another divergence, is that on the daily chart, it looked like price was going to go down. But on the weekly chart, it's the complete opposite story. Okay? Which is why I don't understand why people are feeling bearish on this stock now. Like, on social media, some people are saying that they're going to short it or they're going to buy puts on GameStop. And to me, I just don't understand that from a fundamental and from a technical perspective, because look, on the weekly chart, it's looking like these lines are going to cross over. Okay? And when the green gets below the red on Fidelity, okay, what colors may be different depending on what platform you're using. According to the MACD, that's a very good sign. Now, it hasn't done it yet. We have to wait and see. But also, just from a fundamental perspective, like, it's the holidays soon. Thanksgiving is in a week and a half, 2 weeks, something like that, right? Black Friday is soon. People are going to be shopping. Now, granted, if you've been following along on my tweets about the macroeconomic forces going on, people have less disposable income. Some people don't feel good about the economy. People aren't spending as much. But GameStop seems to be doing really well in their sales. So, again, I don't understand the bearish sentiment at this point in time. Like, there's not much juice in there to be squeezed. You know what I mean? That's just my opinion. Not financial advice. Nothing. Look, I might have to repeat this every single video, just to cover my ass. But I'm just here to educate. The stocks that I show on the screen, they're for demonstration purposes only. It's not a recommendation. It's not an endorsement. Don't take it as investment advice. I'm just trying to show you what I'm seeing. Okay? So, on a weekly MACD, it looks really good. On the daily, it may not look good, but here's the problem again, okay? Same thing with like all the other technical stuff that I've said. It just offers you suggestions. On the daily chart, it's suggesting that, and it's still kind of far away, but maybe by next week or the week after, maybe we might have a bearish crossover on the MACD, okay? But on the weekly chart, it's saying the exact opposite. And whenever you're doing technical analysis, you want, indicators to line up. So if the RSI looks good, that's a bullish sign. And if the MACD also looks good, that's a bullish sign. If the moving averages, are all trending upwards, that's a bullish sign, right? And if you see the price volume, supporting your price action with no resistance overhead, that's a good sign too. So then at that point, you can say, okay, the chances of this stock moving higher and higher are good. And that's how you have to approach it. Same thing if you're looking at it from the other direction, right? If all those indicators that I mentioned are looking kind of bad or weak, then you have to say, okay, well, the chances are that the stock may be headed down. And from a weekly perspective on the MACD, and also a little bit from the volume and profile, I just don't see where the negative sentiment is coming from on the stock. Right? We're trading in between these two levels of support and resistance, and it's not clear that any side has won yet, whether it's the shorts or the longs. So we'll have to wait and see. Don't know. All right. RSI, MACD. What else? I'm not a huge fan of this one, but we'll add some Bollinger Bands. Okay, so go down to the indicators, top left, and go to the B section, Bollinger Band, BB. Let's zoom in a little bit because this one's a little bit of a weird one to understand. Let's go to like a 5-minute chart, maybe. When you turn Bollinger Bands on, you'll see this weird, highlighted section. Okay, and what a Bollinger Band is it takes a moving average. Okay, in this case, it's the 20-period moving average. Okay, you can see it in this here. BB is Bollinger Band. 20 is the 20-period moving average. So since we're on the 5 minutes, it'll be 20 times 5. Okay, if it's the daily, it's the past 20 days. If it's the 1 minute, it's the past 20 minutes. Okay, hopefully that wasn't too confusing. 2 is 2 standard deviations, and that's what a Bollinger Band is. Okay, they draw these lines based on standard deviation. So they'll chart this 2 standard deviations above the current moving average and 2 standard deviations below the moving average. And what this is again, it's another suggestion. It's not a prediction, it's just a suggestion. And what it says is that assuming that there's this moving average, okay, if the price goes below 2 standard deviations, it probably has gone too far. And it's probably due to come back up. And you kind of see that here, right? Here it went outside of the Bollinger Bands. And again, and then buyers stepped in to push it back up here again, right? And then it moved it closer to the moving average. And here again, it broke out, and then the next 5 minutes it went back up again. And then it just kept going down. And this one's another one, right? It broke significantly below the Bollinger Bands, and then buyers stepped in to push it back up again. Okay, and this is what you see. And same thing on the other side. If it goes too far above the Bollinger Band, it goes too high, people step in to sell it back down. These are most likely day traders. Okay, day traders, they make tens, if not dozens of, or hundreds of, or maybe even thousands of moves every day. And if it's an institution, they're probably using high-frequency trading computers to do this. Okay, and there's some arbitrage opportunities here, right? Yeah, maybe you only make a penny or a few pennies on these trades, but you add that up, it's money over time. I'm not suggesting that anybody do that, right? For lots of reasons. I'm just saying that if this was a different stock, well, even with this stock, that's probably what's going on. Okay, so that's Bollinger Bands. Now again, when in doubt, zoom out. Let's go out to a daily chart. This is another shout out to Howie. What's going on, Howie? And let's zoom out to like a whole year, okay? And again, looking at slope. Okay, Howie likes to look at the monthly and the weekly. We'll get to that. We'll get to that. But let's look at the Bollinger Band on the daily. Okay. Now, this range back here in the January-February time period is huge because of how volatile it was back in January. Okay. But the thing to note is that whenever the Bollinger Bands squeeze together, it means that there's a decision to be made, whether we go up or down. And here we went up. Okay. Again, it squeezed here, and we went up again. Here it's, the Bollinger Bands squeezed again, and we went down instead. And here, again, the Bollinger Bands got really tight. And we squeezed up a little bit. We squeezed again, and we went down a little bit. Here again, it's pretty tight. We went up. And looking at slope, okay, maybe we should zoom in a little bit. Looking at the slope right here, right? Currently, we're slowly trending upwards. This Bollinger Band is slowly going up. Okay. Again, when in doubt, zoom out. Let's go to a weekly chart. On a weekly chart, look, we're doing it again. We're squeezing. So a decision is going to be made here pretty soon on the weekly chart. That's what it's suggesting, right? And again, if you look at the MACD, it's looking like this is going to be bullish. This is just telling you, the Bollinger Bands here are just indicating that something is going to be happening soon. The MACD here is just suggesting that this may be a bullish crossover, right? When the green line gets below the red line, that makes, or it's not that it makes, it's just saying that the price is going to go up. The RSI, though, is a negative divergence here. See how it's going down, but it could always bounce. So we have to wait and see, right? What else? Looking at the volume and profile, right? It looks like 195 to 205, that's an important area. Currently, we're above it, which means that this is our level of support, which means that if buyers are continually able and willing to step in at this price to keep buying the stock, short sellers are not going to be able to get it below that as long as the buyers keep stepping in, right? And then it may go up to here, 225 to 235. If we can break above that too, well, look, there's no more volume in profile candles above that, at least on this time period, okay, on the weekly period, going back to 2014. Okay, so what it means is that we don't know what's going to happen after that. It's blue skies above, meaning we could go as high as the sky says we can. Okay, so we're at an inflection point right now with this stock in particular, and that's interesting. So we'll have to wait and see what happens. I think we go up. Personally, again, this is not I'm not trying to say that it will, obviously, because I can't tell the future, but looking at these indicators on the weekly chart, it looks like there's a good chance that we go up, that we go higher. Okay, and let's go to the monthly just to do our due diligence to Howie, and look, this is what he sees too. On a monthly chart, you have to say that this is good, because for Howie, the Bollinger Bands are going up. He also looks at the stochastics, the fast moving and the slow moving, but I don't really know how to use those, so I'm not going to get into them. RSI, MACD, volume. I use a couple others, but really I look at the MACD a lot and the volume and profile. Those are the two things that I look at. Okay. All right. That about wraps it up. There's one last one that I'm going to show you that, you're probably going to get mad that I went through all of that and saved this one for the last, because this one is so stupid. A lot of charting platforms have this, okay? The nicer, higher end charting platforms have this, and that's pivot points. And you turn that on, and you see these arrows that tell you which way the price is going. Okay, well, we can't look at the monthly because it's just, the monthly chart tells you should have sold back in January of 2021. But then there's no green arrow down here to say, oh, hey, in late February, you could have picked this up and made a lot of money, right? Again, back in February, the stock got knocked down from 400, 500 in January to $40 to $38. Okay. Here's the green arrow. What is that? 2007. Okay, so this monthly chart with the pivot points, that doesn't really tell you a lot of information. But also, if you go too far in, like let's say on the minute chart, now we're getting a little crazy here. Okay, this is just strictly day trader territory. Okay, and you got to be able to input orders really, really fast. So I don't like this way of trading. I'm an investor for the most part. I like holding things for a long time. But just for, for science, let's just look at this. Okay. So it's telling you that, the red arrow means that the momentum is shifting downwards, and the green arrow is telling you that the momentum is shifting upwards. You could interpret these as buy or sell indicators, right? So when a red arrow shows up above, that's a sell indicator. A green arrow below is a buy indicator, but it's not perfect, right? Like obviously going back to, what was it, the monthly? If you listen to these, you wouldn't know what, you wouldn't be able to tell what to do, because if you sold in January and you didn't buy in February because there was no arrow that showed up, you would have missed out on all of this, right? It was $38, $40, and it's $200 today. So you could have 5 times your money, but there was no green arrow, right? Now, obviously the monthly is too huge of a time frame, but also the weekly. Right? On the weekly, it hasn't told you to sell yet, even though on the daily and smaller time periods, it told you to sell on this 255 day, right? See, no red arrow. This is not edited. Right? So, and again, Even on the weekly, it did not tell you to buy in February. There's no green arrow down here. So this is not the perfect solution. This is just another indicator that you could use just for, more information. And if you're new to this, I know it's a lot. You gotta kind of just practice. You just have to do this all the time. You'll get used to it, I promise you. And just practice. And just don't look at only one thing and that thing is like, don't let any one thing become a religion. Okay, these are all indicators. Don't tell Pone I said this either because she hates technical analysis. But these are all factors, right? Think about it as a checklist. And you can go through all of it, right? Are the moving averages looking good? Those are all check marks, right? The 9, the 20, the 50, the 200, right? Those are all check marks. You probably go the other way. 200 looks good. We're above the 200. That's good. Okay, are we above the 50? Yes, we're above the 50. That's good. Are we above the 20 right now? Yes, we are. That's good. Are we above the 9 right now? Yes, we are. All bullish signs right there. Okay? Bollinger Bands. Are they coiling up? Is it tightening up? Yes. Now, that's neither good nor bad, but you have to look at other things, right? So above moving averages suggests that this Bollinger Band coiling up is good. Entering the holiday buying season, Christmas, Hanukkah, Kwanzaa, whatever holiday you celebrate, right? You know that sales go on right now and people spend money for the holidays at the end of the year. That's good. MACD, about to, on the weekly at least, right? About to cross over bullishly. That's good. RSI right now, not looking great, but you can't have it all, right? Volume picking up is another thing, right? On the green days, we have increasing volume. You see that? We had low volume here on this green day, more volume here on this green day. That's good, right? So think about it as a checklist. Pivot points, okay? Again, indicator, drop-down menu, pivot points, high, low. You have pivot points. Yeah, that's going to add a bunch of lines. I'm not going to add that one just because it's too much on the screen, too confusing. Okay, that should be everything. There is going to be a Twitter space call in about half an hour. I'm going to stop this recording here, upload it, tweet it, and hop in the space call. Let me know if this helped out. Let me know if this was good, bad, indifferent, neutral, boring, whatever. Let me know, and I'll try to improve for the next set of videos. Yeah, that's it. Okay, again, nothing I say is investment advice. Nothing I show on the screen is an endorsement or, a recommendation or anything like that. It's just that I know that my audience is particularly focused on GameStop. We'll do some charting on Loopring coin in the next video because there's some things that I saw that other people may not have seen, and we'll do that. That should be interesting. Okay. Again, not investment advice. Don't take anything I say as investment advice. This is for educational and demonstration purposes only. If you listen to me, there's definitely a chance you could lose all your money. Don't sue me. All right. Have a good day.